Welcome to today's Explainer. We're putting our detective hats on to unpack a financial rumor that recently spread like absolute wildfire. You might have seen the sensational headlines claiming that the Indian government secretly sold off a massive $12 billion of its national gold reserves through the Reserve Bank of India. It caused widespread panic, heated political debates, and genuine concern among everyday citizens. But what's the actual truth hiding behind these viral headlines? Today, we are going to systematically break down the data, do the math, and decode this $12 billion mystery once and for all.
Here's our roadmap for this explainer. We'll start with the viral gold rumor itself, look at some flashbacks to 1991, dig into the missing May data, decode the actual gold math, and finally, look at the real economic picture.
All right, Section 1, the viral gold rumor and how a tiny whisper turned into a full-blown national financial panic.
So where did this all begin? It actually started with a report from Bloomberg, a highly respected international financial outlet. They wrote that the Indian central bank may have offloaded a portion of gold holding to shield its foreign currency asset. Now, catch those two words, may have, right? It wasn't a confirmed fact, it was just a possibility they were floating to make sense of some market movements during all the ongoing tensions in the Middle East.
But you know how the telephone game works? That super cautious, nuanced phrasing, may have offloaded. Well, it basically vanished the second it hit domestic media and social media influencers. It completely morphed into this absolute blazing headline. RBI sold $12 billion in gold. Literally, no question marks, no context, just a definitive claim that a massive chunk of the nation's wealth was liquidated.
And naturally, a headline of that magnitude doesn't just stay quietly in financial circles. It triggered a massive, immediate political outcry. Prominent opposition leaders like Rahul Gandhi and Arvind Kejriwal publicly questioned the government, asking if the country was facing some severe hidden economic emergency. Gandhi warned of a looming crisis, while Kejriwal demanded transparency. Now, no matter your politics, the real takeaway here is that these high-profile statements acted like a giant megaphone. They reflected and really validated the sheer scale of the panic the public was feeling.
Moving to Section 2, flashbacks to 1991. Why exactly did this rumor cause such intense historical anxiety?
To really get why people freaked out, you have to understand that for a lot of Indians, the government selling gold isn't just a financial transaction. It's deeply tied to national trauma. Back in 1991, the Gulf War kicked off a severe oil crisis. India was facing a massive shortage of US dollars, which you absolutely need for international trade. It got so incredibly bad that the government was literally forced to secretly airlift 21,000 kilograms of its national gold reserves to foreign banks just to keep the economy afloat. So seeing a headline today about gold being sold to shield foreign currency assets, yeah, that instantly rips open those 1991 scars. People immediately think, oh no, are we out of dollars again? Are we collapsing?
Section 3, the missing May data. Let's look at the suspicious numbers that really fueled this fire.
As the panic is peaking, the RBI steps in to do a rapid fact check. They officially clarify, hey, no gold has been sold. They stated that the physical weight of India's gold reserves was exactly 880.52 metric tons as recorded up to April 24th. But instead of calming everyone down, that specific date, April 24th, actually poured a whole lot of gasoline on the fire.
Here's why the plot thickens. That original Bloomberg report came out in early June, and it was talking about data from May. Eagle-eyed financial watchers noticed the RBI's statement deliberately stopped in April, and when they finally went digging into the RBI's own public documents for May, they found a jaw-dropping discrepancy, a massive 46,000 crore rupee drop in the gold's value.
When you look at the RBI's actual data, you see that on May 15th, the total valuation of the gold was roughly 11,45,045 crore rupees. But just 1 week later, on May 22nd, that valuation had plummeted to 10,98,000 crore. Mathematically, this proves that nearly 46,000 crore rupees of value literally vanished in a single week. If you convert that missing value using the exchange rates from back then, it's, yep, you guessed it, around $5 to $12 billion. That perfectly aligned with those catastrophic rumors. So people were naturally asking, well, if you didn't sell it, where on earth did the money go?
Which brings us to Section 4, decoding the gold math. Let's uncover the truth behind those vanishing billions.
Okay, the absolutely crucial thing to grasp right now is the difference between physical volume and market valuation. A valuation change is just a shift in the total worth of an asset because of market price fluctuations. It does not mean the physical quantity changed one bit. It's kind of like owning a house, right? If the housing market crashes, the total dollar value of your house drops, but you still own the exact same amount of bricks and the same roof. Your house didn't physically shrink.
Let's actually walk through the calculations step by step to see what happened to the RBI's money during that crazy week in May. Step 1. We look at the international market. During that exact week, the global trading price of gold took a sharp dip, dropping by about $41 per ounce. Step 2. We take India's total physical reserve, that 880.52 metric tons, and mathematically convert that massive weight into ounces, because that's how international gold is priced. Then, step 3. We multiply that total number of ounces by the $41 price drop.
And here is the ultimate plot twist of our explainer. When you do that math, the resulting number perfectly matches the missing 46,000 crore rupees. It's an exact match. The vanished money was simply a reflection of international market fluctuations. The value of the asset just temporarily dipped on global charts. The RBI wasn't out there trading gold like vegetables in a market. Not a single gram of physical gold was actually loaded up and sold. The volume stayed exactly the same. It's literally just the price tag attached to it that changed.
All right, Section 5, the real economic picture, and the actual challenges hiding behind all this fake news.
Now, there are genuine underlying economic pressures that made this gold rumor feel so incredibly believable in the first place. Because of tensions in the Middle East, specifically involving Iran and Israel, oil imports have gotten way more expensive. And since oil is bought in US dollars, this drain on reserves has contributed to a dropping value of the Indian rupee. Plus, those same global tensions have hurt Indian exports to the Gulf and reduced inward remittances. Honestly, the government is so focused on keeping dollars inside the country that they actually maintain a super high 15% import duty on gold, just to discourage citizens from buying it and sending more dollars abroad. So, the public wasn't crazy to feel economic anxiety. They just attached that very valid anxiety to a mathematically incorrect rumor.
And hey, just to reassure everyone who might still be having those 1991 flashbacks, here is exactly where India's 880.52 tons of gold is safely sitting today. A solid 77% of it is secured domestically, right within India's borders. The remaining 23%, that's held internationally, safely deposited in secure institutions like the Bank of England, which, by the way, is totally standard practice for major global economies. The national treasure is safe, it's accounted for, and it is fully intact.
Which leaves us with this final, kind of provocative thought. We just saw how a single super cautious may have from an international report got twisted by the telephone game into a fake national crisis that shook the markets and the political landscape. So in an era where complex financial data is easily misunderstood and instantly weaponized for clicks, how can we better protect ourselves from the rapid spread of sensationalized financial panic? Well, it all comes down to pausing, demanding the raw data, and, just like we did today, doing the math. Thanks so much for joining me for this explainer, and stay curious.